Our Sunday market review is here, and we are here to look at possible entries or signals or trades that you can take when the market opens. Leading Forex YouTube channel. My name is Kofi, your admin. Let's go into last week's video or last week's signal. That signal actually gave us a lot of answers to some of the questions that are bothering us. I want us to go there and look at a review of last week's signal. Then we can go straight into this week's signal. Now, this was last week's signal. If you look at the chart, you can see USD/JPY. We gave USD/JPY as a buy trade. We forecasted a buy on USD/JPY. Now, what happened? If you look at the chart, you realize that USD/JPY consolidated over here and then gave us some profit actually until Thursday, I think Wednesday or so, somewhere Wednesday evening to Thursday morning, the market started moving so well out of the consolidation zone. Now, if you look at where it started, our entry to where the market reached, you realize that this trade gave us some profits, almost 55 to getting to 60 pips, almost 60 pips profit within the consolidation that I'm talking about. Within this consolidation, we got almost 60 pips before it broke out of the consolidation and came down. Now, what happened? When it came down against us, it hit our stop loss. Immediately it hit our stop loss, the trade went back up into profit, seriously back into profit, almost hitting our 100 pips take profit. And the question is, what happened? This is what a lot of us will say, that the broker traded against us. You often hear people say that brokers trade against us. And because of that, they feel like there's no need to even take anything from a broker. Some say there are manipulations from brokers. And this trade, for example, may answer that question. After hitting our stop loss, the trade went back into profit. So does that mean that indeed the brokers actually traded against us? And the fact that after they hit our stop loss, they took the trade back in our favor and almost to our take profit. Is that the case? That is the first question. One will also say that, okay, if we had increased our stop loss a bit downwards to this point, somewhere here, or here, or maybe if we had put our stop loss to this level here, the last lower low, maybe this wouldn't have been hit. So maybe our stop loss wasn't right. We gave it a tight stop loss. But this is 100 pips. Also say that we didn't enter the trade well. We didn't get the best entry for this trade. Okay. One will also say that we didn't get the best entry for this trade. That is why. Because if we had gotten our entry around somewhere here at this support zone, if we had taken our entry around this support zone, maybe we wouldn't have hit our stop loss. Or maybe if we had waited for a breakout from this consolidation, we would have gotten the right entry. So a lot of suggestions will come out from this entry. Now, I want to answer these questions one by one before we quickly go to today's signal or this week's signal. Now, the first question here is it that the broker traded against us and then hit our stop loss and then went away into profit? That is the first question. And I want to do this in answering these questions. Now, let me tell you this. Every broker, as the name suggests, is a mediator between us and the liquidity providers, which are the banks or other traders. Okay, the brokers are mediators. So when you are a trader and you place a buy, we have two types of brokers. I think you know that. We have the market makers, and then we have the deal index brokers or the no deal index brokers. The market makers are the deal index brokers, okay? And the no deal index brokers are also there. Now, let me explain. This thing has been coming up, and so I want to use this to teach this once and for all in this tutorial or in this forecast. Let me put it. Now, the deal index brokers, what happens is that they are mediators, but when you place a trade, they take the trade, okay, and then they look for someone who is doing opposite of what you are doing. Let me be more practical with examples, okay? Let's say that I want to place Euro USD buy, and then I put in the trade on my broker, Euro USD buy. I've entered my lot size, everything, and then I enter a buy. Immediately, the deal index broker or the market makers would have to accept your trade by taking the opposite of your trade. And then once they do that immediately, then they begin to look for whoever is also selling Euro USD. Especially they look for whoever is doing opposite of you from the liquidity providers, the banks, the institutions, or any other trader that is taking a sell on Euro USD. I am taking a buy on Euro USD. The broker has accepted that entry by taking the opposite of me. And then right after they take the opposite of me, they look for a liquidity provider who is selling Euro USD. And then they pass on the trade to that person. So they match me to whoever is taking Euro USD sell. So I am buying Euro USD, the broker takes the trade and then pass it on to whoever is trading the opposite of me. And then it becomes a competition between me and that person or that company or institution. So in a nutshell, if I win, if the trade begins to go by, then it means I am in profit. And that person, that liquidity provider or whoever they match me with is in loss. If it turns out that the trade goes sell and I begin to go in loss, then it means that liquidity provider or whoever they matched me with is making the profit. That is how trading goes. So whenever you take a trade, whenever you enter a buy or a sell, you should know that your broker has matched you with someone who is taking the opposite of you. So when you are making profits, it means that the other person at the other end is making a loss. And when you are making a loss, you should know that the other person at the other end is also making profit. That is how trading goes. It is not a cheat, and it is something that I wish I could explain further, but for the sake of time, this is not a tutorial video, so I wouldn't want to waste my time on this, but that is what happens. So some brokers are very smart. I'm on the deal index brokers alone for now. Some of them are very smart because they do this manually. Listen, the deal index brokers or the market makers, they do this manually. Passing on your trade to someone who is trading the opposite of you and blah, blah, blah is done manually. So because they do this manually, when you take a trade and then they place an opposite trade against you, or they decide to accept your trade and then begin to look for someone to match you to, sometimes some of these brokers are very smart that they can look at your trading history. Okay, they can look at your trading history whilst they are in search for someone who is doing opposite of you. They can look at your trading history, and when they realize that you are not a good trader, you always lose. When they realize that you always lose, what the broker can choose to do is to hold the trade against you without giving you to any other person. I don't know if this makes sense. The broker, they're supposed to be mediators. So they are looking for someone to match you. They haven't gotten anyone yet, or they have even gotten, but they have looked at your trading history and they've realized that you are not a good trader. You always make losses. So the broker can choose not to match you to anybody, but they can choose that, okay, they have accepted your trade. It means that you are now trading with them. So it means already they have matched you with them. So they can choose to leave it that way, knowing very well that you are not a good trader. You lose your money to them. Are the brokers wrong? Or are they a cheat? No. The broker doesn't control price. Listen carefully. The brokers, they don't control price. And so they cannot manipulate your trade. They only pick price feed from the liquidity providers, which is the banks. So the brokers themselves cannot manipulate your trade because they are just betweeners. And they make commission from matching traders to the liquidity providers or matching traders to trade. And then they make commission from that. That is their job. But sometimes they can capitalize on your inexperience in the market and decide not to close or not to match you to someone else, but themselves. And then knowing very well that you are not a good trader, you will lose. And then you lose the money to them. The truth is that even if they had matched you to someone, you would have lost your money to that person. So instead of allowing you to lose your money to that person, sometimes they decide that, okay, just lose it to us. Let's take it. So the brokers do not control price. They only take the feed from the liquidity providers. And then they present it on the MT4 for you. Okay? Now, when they present it on the MT4 for you, they have nothing to do with it. The only thing they can do is that in the process of matching you with another trader or matching you to a company or institution who is taking the opposite of your trade, that is when they can choose not to match you to any other person by themselves. Because immediately you enter a buy, immediately they have to accept your trade. So by accepting your trade, it means that they have to take opposite of you immediately. And then they begin to look for someone that they can transfer your trade to match the two of you to continue. But once they accept the trade and your trade is running, and they realize that you are not a good trader, you have bad history in terms of losses, they can choose to keep the trade with you, so you lose it to them. The same way when they realize that you're a good trader, listen carefully, when they realize that you are a good trader, looking at your history, they will never want to keep their trade with you because they know that if they keep their trade with you, they are going to lose their money to you. So they will try their best and look for a match for you. Does this make sense? They will try their best and look for a match for you because they don't want to lose to you. So immediately you take a buy and they know this guy is a killer, this guy is a crazy trader, he's a good trader. They will not want to keep your trading against you because they know that if they want to take that risk, they will lose their money to you because you're a good trader. You always have good trades and you always come out profitable. So in that case, they will look for a match for you from the outside. Any liquidity provider or any other trader that is taking the opposite of you, they will quickly match the two of you. And then they stay in their lane. And then they watch. When you win, they get their commission. When you lose, they get their commission. But when they realize that you are not a good trader, sometimes they can choose not to match you. They will just be the one you are trading with. And then when you lose your money to them. So the question of the brokers are bad, they can choose to trade against you and make you lose is neither here nor there. But this is the reality on the ground. I must be frank with you. This is the reality. That is the deal index brokers or the market makers. What of the no deal index brokers? For the no deal index brokers, they do not have that manual processes. Theirs is automatic. And automatic in the sense that they do not have a hand in matching you to whoever. Once you place your trade, theirs is to the system. They have a system that will match you to any other trader or liquidity provider immediately, not themselves. They are not involved at all. They are just sitting there somewhere because they give you the feed from the liquidity providers. So when you watch and you decide to take a trade, that is none of their business. Theirs is to look for someone and match you. Whether you win or you lose, they are going to make their commission because they're supposed to be mediators. They are supposed to be middlemen. So they do not have any business doing with you in terms of whatever your trade becomes. Whether you lose or you win, they have taken their commission. Theirs is to just match you automatically to whoever is taking the opposite of you. So the problem is actually with the market makers, which is the deal index. They are the brokers that can sometimes decide not to match you to an external trader or a liquidity provider, but choose to hold the trade against you or with you. They will choose to hold the trade with you and see whether you win or you lose. So if you lose, you have lost to them. If you win, you have won from them. Is this clear? So the question of that, looking at this signal, let me go back to the signal now. So going back to the signal, we are back to the signal. So the question of, okay, one will say that, okay, the brokers might have taken the price to the opposite side to hit your stop loss and decided to take the trade in their favor. It's not true. I repeat, it is not true because they don't control price. Price is controlled by the liquidity providers, which is the big banks. And you know the big banks already. The JP Morgan and the rest, the Citi Bank and then Barclays and the rest, they control the price. So the broker is only taking the feed from them, the price from them, and giving it to you on the MT4. So they do not have a hand in trying to show the direction or trying to go where the trade is not going. They cannot do that. The only thing is that if you are not a good trader on their platform, they can choose to hold trades and then decide to trade with you. When you win from them. If you lose from them. But when they realize that you're a good trader, they will never trade against you, or they will never take your trades in opposite. They will match you no matter what. They have people that are trading opposite of you. So they will make sure they pass you on to those people to trade with. And then they stay in the middle and then they take their commission. Is that okay? So I'm sure you will have an answer to this question of the broker have decided to take the trade against me and then decided to go the other way. No, this is the answer. Now, the second question is, what if we have we decided to move the stop loss a bit further to the downside? Maybe we would have won. That is the question or the answer someone will say. Now, let me be honest and also tell you that it is not like that. If you choose to move your stop loss and the trade decides that it will keep going down, it will go. Okay? It doesn't matter whether you move your stop loss to wherever. You can choose to bring your stop loss even here. If the trade will continue to come down to this point and even bypass and go down, you have no control. It will do that. So the issue of moving stop losses and whatsoever is also neither here nor there. You can choose to make your stop loss very tight or very wide. If that stop loss will be hit, it will be hit. If you are in a direction where the price is going opposite, trust me, it can even go 1,000 pips and continue to go against you. So the issue of trying to modify your stop loss and increase your stop loss or reduce your stop loss or having a tight stop loss and whatsoever is also not the issue. That is why it is said that no one can be a perfect trader 100% without losses. No matter what it is, you will incur losses as a trader. So when the loss comes, you must accept it in good faith. It is not about my stop loss was too tight, or it was too open, or it was still whatsoever. But it is good that at least you have a moderate stop loss that will allow the trade to run. That will give the trade a breathing space. And for me, I think this was enough. The stop loss of 100 pips was enough breathing space. Although if we had gone 150 pips, maybe this one we would have won. But trust me, there would have been another one that you will go 150 pips and it will also hit. And you will say that, oh, if you had gone 200, that would have been better. So there's no need. If you lose, you lose. If you win, you win. So we don't have the issue of having a tight stop loss or a wide stop loss or whatsoever. Make sure that you just have a moderate stop loss, that which is moderate for you, that you can stick to. That is the way to go. So the issue of if we had shifted the stop loss a bit down would have been better or whatsoever is also not the answer. And then the last question is, oh, we didn't have a perfect entry. Or one would say a sniper entry. That is why. Let me tell you another thing here. There's nothing like sniper entry. Your entry can be sniper if the trade will go against you to go against you. Yes. You can even put your entry here. You can choose to put your entry here, okay, where I'm kind of marking. That should be your entry. If the trade decides that it won't go up, but it will continue coming down, it will come. So there's nothing like a perfect entry. There is nothing, I repeat, there is nothing like perfect entry in Forex trading. You just have to look for a good entry, that's all. There's nothing like perfect. This one is perfect. There's nothing like that. Maybe you won that one. That is why you think that it is so perfect. The fact that you won it doesn't mean that it was so perfect. No. There's nothing like perfect entry. So as a trader, if you are looking for perfect entries, trust me, you can go the whole world and come back. You may not get it. If you want to look for good entries, it is possible you can get that. So every good trader must look for good entries. And looking for good entries doesn't mean that you will not lose. You will lose. The reason is because your entries are not perfect. So no matter what, one or two may go in losses. Is that okay? Now, that explains my 3 questions one would have asked with regards to this. Now that we are done, let's look at the signals for this week. This week, I want to give you GBPJPY. This is going to be our signal for this week. Now, we are seeing something here. Okay? And that is a support that one will say, let me do this so that this explanation will become clear. One will say that this support was broken, right? One will also say that this was a false break. Okay? One will also say this was a false break. Now, another person may also say that it is actually hitting a support because the person is trying to draw a trend line like this. And if that be the case, it means we still have some moves to go on the upper side. Is that not it? Okay. So I want us to look at a buy opportunity for GBPJPY. Now, if I go on the 4 hour, this 1 hour, let me go on the 4 hour. If you go on the 4 hour, you can see it. You can see that we are having a very resistant zone here, a very strong resistance zone here. You can see it. And anytime price comes to that level, it bounces. If you look at it from this perspective, anytime price comes up to this level, it comes down. It came back again into this zone. It came down on the 4 hour. Now it went out and broke through and went all the way up. Now, it came back to that level again, respected, and went up. It is back on that level again, respected, and it is making its way up. So we are seeing this zone as a very strong zone for now until it is broken. We will have to keep watching it as an area of rejection, both from the upside and the downside. It's a very strong area of rejection. So we are looking at having a buy to the upside. And if you agree with me, that will be our signal for this week. I would like us to take a buy on it. So we're taking a buy based on this explanation that I have just given. So you can put your stop loss at the end of it. So we normally say our stop loss is 100. So this is 99. So 100. And then our take profit, we are looking for 100 also. There's 107. There's 95, 102, 101, 100. So this is going to be our trade. Okay. This is going to be our trade. So let me clear this, and then this is going to be our entry. So let me go back to the 1 hour. So on the 1 hour time frame, this is going to be our entry. No, come on, close in. Okay. So this is going to be our trade. So the take profits price, let me write it and then we are done. The take profit is 169.944. That is the TP. And then the stop loss is also 167.928. That is going to be our stop loss. So GBPJPY, we are looking at a buy with this. So please, when the market opens, like we usually do, you wait for an hour or two or 1 hour, 30 minutes for the spread to close before you take your trade. So let's see how this week will turn out, okay? Let's see how this week will turn out. Until then, this is Leading Forex. Subscribe to this channel because every Sunday we come your way with market reviews and we give you tips and also tutorials that will help you to become a good Forex trader. We also have a Telegram channel. You can join our Telegram channel through the description of this video. There's a link to join our free Telegram channel through the description of this video. We also have a website. You can find the website link where we provide signals. You can see the link at the description of this video where you can go to our website to receive signals also there for free. All right, that is that. I'll see you again at the end of this week. Thank you, and I wish you the best in this week.